So stocks got hit a little bit hard this week, with the S&P 500 being down more than 2% on the week. Given that it's been an incredibly long time since we've seen any kind of a pullback, this is pretty much expected going into the end of July and the beginning of August. We thought there might be a pullback of some sort as people were taking profits at the end of the third quarter. For those of you who are as older than I am, you might remember a guy named Donald Rumsfeld, who was the Secretary of Defense for both President Gerald Ford and President George W. Bush. Rumsfeld famously talked about unknown unknowns. These are events that we can't foresee coming. We have known unknowns. For example, in the stock market, whether it's earnings reports or the upcoming inflation report, we don't know what those reports are going to say, but we know that they're coming up. The unknown unknowns are what hit us this week in the form of the Fitch rating agency, which downgraded the U.S. debt from AAA to AA+. As a result, stocks sold off, and although the downgrade was only partially to blame, investors were taking profits because we've seen an incredible rally from March through July. Also this week, we got the non-farm payrolls report, which showed that we added 187,000 jobs in July. This was a little bit below the Dow Jones estimate for 200,000 jobs being added, so the jobs market is remaining strong without being overheated. Additionally, unemployment came in a little bit lower at 3.5% versus the 3.6% that was expected. So the jobs market is remaining strong, even in the face of all of the rate hikes that the Fed has done. But it's getting weak enough that it's possible the Fed may finally be done. We won't know, of course, until the Fed meets in September. The next big catalyst will be in the form of the inflation reports, but those don't come out until mid-August. So like I said last week, we need to keep our eyes peeled for those unknown unknowns. One key news event this week was that the United States had given $350 million in military aid to Taiwan. Some political experts believe that China may actually try to invade Taiwan in the upcoming days and weeks. However, other experts argue that since the United States needs China to buy the country's debt, that this was just political posturing, and that there really isn't a risk of China invading Taiwan, since it would both damage China's economy as well as upset the United States at the same time, plus put the entire world into a frenzy. Since the U.S. Treasury had to operate in emergency protocols going into the debt ceiling debate, there is a concern about the amount of issuance that the Treasury needs to do to refill its coffers. Between now and the end of the year, it's estimated that the U.S. Treasury will want to issue more than $1.3 trillion in debt. And this could seriously devastate the stock market. In fact, just this week, the bond market saw a significant amount of volatility, and stock analysts believe it's only going to be a matter of time before that volatility works its way into the stock market. So that could be a big catalyst to the downside. Over in Bitcoin, you might remember that last week I warned that if Bitcoin broke through the low at $28,870, it would probably sell off quite a bit and might be able to find support on the top of the parallel channel that we've been using for a couple weeks, and that's exactly what happened. Bitcoin's new low of support is down here at $28,575, and that needs to hold. Once again, if that breaks, then we're going to see even further lows. I also said that if Bitcoin rallied, it was highly likely that it would see resistance before it got to $30,100, which was right around our parallel channel going upward at the time of the video recording. Bitcoin did bounce off of its low, but as you could see, it did find resistance right under $30,100, with our weekly high now being $30,027. We now have that trading range established with the high and the low. So it's possible that Bitcoin will just continue to trade within this range for the upcoming days and weeks. Right now, the bulls believe that Bitcoin will not sell off below $27,000, that there are so many different levels of support there that the buyers will come in and keep the price from going lower. The bears in the space argue that Bitcoin is going to sell off a lot more, that since stocks are already starting to roll over and Bitcoin was already weak going into this, that it will mean that the stock market will push Bitcoin further if the sell-off continues next week. For me, I always stick to having a plan for both directions. I've already been adding slowly to my position in Bitcoin with very small buys. Warren Buffett once said that you keep your bat on your shoulder until you see a fat pitch, and the only way you can be there to buy in big if Bitcoin sells off huge is if you keep a lot of money on the sidelines. So I buy in very small quantities until Bitcoin really sells off. If Bitcoin has bottomed and heads higher from here, that's a high quality problem. My position will be profitable. It'll just be smaller than I wanted. However, if Bitcoin continues its sell-off, I will continue to add to it as it sells off, and I will increase the quantities more and more as we get towards June's low of just under 25,000. Over in my investments in play portfolio, this week's winner was Amazon, who rallied 5.6% after reporting an outstanding earnings quarter. Amazon has been struggling behind its big tech brethren, and it finally caught up this week with an impressive rally considering that the S&P 500 sold off more than 2.2%. This week's loser was Block, which reported a decent quarter, but gave such poor forward guidance and revealed that it had bad growth, that it sold off a whopping 18.96%. As a result, Block and PayPal, which both reported bad quarters, brought down the entire fintech space, including SoFi, which reported a good quarter this week, but still ended up selling off below last week's price. SoFi closed the week down 0.42%, and it actually had a blowout earnings quarter with great forward guidance. So it's important to remember that sometimes even being in the same sector as other bad stocks will draw your position down. Over in the speculation and play portfolio, this week's winners were obviously my QID and SPXU positions, which are the inverse ETFs against the NASDAQ and the S&P 500, respectively. However, I consider the real winner this week to be Zillow, which came out and reported an outstanding quarter. As a result, Zillow rallied more than 5.25%, and in a week where the S&P 500 sold off more than 2%, that is a significant win. This week's loser was Carnival Cruise Lines, and even though it doesn't report until next month, because its competitors came out and gave really bad quarters this week, it got drawn down with the rest of them. Carnival Cruise Lines sank 7.08%, becoming this week's loser, and it's potentially possible there's more downside ahead, as Carnival may actually report a very bad quarter in September. It was time to take profits in Digital Realty Trust this week. This is my real estate investment trust that specializes in data centers. As you can see, Digital Realty Trust was experiencing quite a bit of resistance around the $125 mark. And when it pulled back significantly last week and ended up bouncing this week, I decided it was time to take profits if it ended up testing those levels again. It did so on the 2nd, with a sale of mine getting filled at $124.70. I sold 7.83% of my position, and this locked in 10.36% in gains over my cost basis, which was then $112.99. This sale only lowered my per share cost 0.88%, down to $112. But the reason for the sale wasn't so much to lower my cost basis, as it was to reduce my allocation in case we saw Digital Realty decide to sell off. From here, my next buy target isn't until $86.46, slightly above the low that Digital Realty Trust saw back in March. And my next sell target is at $135.15. The next point of resistance Digital Realty should see above these levels. To learn more about long-term investing and to follow along in every play I make in all of my portfolios, check out my website getirk.com, which is always 100% free. Please hit like and subscribe. It really does help the channel out. And I'll see you in the next video.